Hello students, this video clip will be covering gross sales recognition with discount not fulfilled. Okay, we are creating the balance sheet and income statement of Apple Inc. So journal entry of transaction, we have the two transactions. Okay, let me read that transaction first. Assume Apple Inc. delivers a load of iPhones to ABC Wireless warehouse in California. ABC Wireless, I haven't heard about this company. But anyway, let's say this ABC Wireless company doesn't have very high credit. But okay, then anyway, the Apple Inc. Made a transaction with it. On the truck are 10,000 iPhones, each of which Apple Inc. sells to ABC Wireless for 100 per phone on account. Apple Inc. will allow 210 net 30. That means that if the ABC Wireless pay out all amount within 10 days, the ABC Wireless will get the discount 2%. Otherwise, this ABC Wireless should pay out the 10,000 times 100, so $1 million within by 30 days in full. And based on the past experience, ABC Wireless has not met the discounted term, so Apple recognized gross sales. In case some sales discount take place, each iPhone that Apple Inc. delivered to ABC had a cost of 60. So this 600,000 is 60,000 and 60 times $60 per one iPhone times 10,000 iPhone. Okay, let's journalize. Accounts receivable, because it's a credit transaction. Accounts receivable, how much is that? Right, 100 per iPhone times how many? 1 million. So, how many? Okay, 10 million. So 1 million. Then it should be gross sales. Again, the reason why I put the gross sales here is that discount is not assumed in the first place. Then the Apple Inc. should recognize gross sales in case the ABC Wireless pay out within 10 days, so that they can get the 2% discount, because it doesn't have enough the past information related to the discount. So the gross sales 1 million. Then based on the matching principle, cost of goods sold. Cost of goods sold on the debit side, because that is expense, that decreases equity on the debit. So how do you calculate it? Again, it's $60 for one iPhone times 10,000. So 600. Oh, I already correlated here. But in order to see the process, I want to just remove that. Let's get started again. Here, the cost of goods sold, and then on the credit, inventory out, asset down. So by this 600, because we have had the inventory 600,000. Then this inventory sold out. This asset now became the cost of this sales, right? So 600, a million. The difference between two is going to be the gross profit. Okay, on the transaction number 2, as expected, Apple Inc. collected the cash after the discount period. ABC paid in 30 days. So Apple received how much? Right, the full amount, a million, because the ABC Wireless company paid cash after the discount term without any discount, 2% discount advancing. So cash in full amount $1 million of this accounts receivable. By this amount, this account receivable should be removed. Okay, this is just a normal transaction, as Apple expected that this ABC Wireless would not pay within 10 days. to get the discount term. So let's get the balance of each account. Accounts receivable on the debit and credit. So the ending balance of accounts receivable is 0. Then gross sales is $1 million, which is the starting point. Then cost of goods sold is the debit account expense that reduces equity. So cost of goods sold, and the inventory, the asset down because the Apple Inc. the sold all the inventory. So 600,000 should be recorded on the on the credit side. And then cash in 1 million was collected. So I believe we collect all these journal entry. We passed all this journal entry into the each T account. Now let's pass this T account balance on the balance sheet. Accounts receivable, okay, when the company sold 1 million and then received cash 1 million. So accounts receivable is 0. Gross sales, as you can see, this the sales part. Sales part is comprised of this gross sales minus the sales discount and then net sales. But in this case, we have 1 million. Do we have any sales discount? No, there's no sales discount advantage from this ABC Wireless. So it is 0. And then what is the net sales? Net sales is just 1 million, which is the same. And then cost of goods sold, here we go, is expense. You have to remember this expense or cost is negative in the income statement. So we record as negative. In parentheses means negative. So the gross profit is just 1 million plus minus 600,000 is 400,000. So we don't have any other transactions under this gross profit. So the net income is the same as gross profit, right? Now the cash, inventory first. Inventory sold out, so inventory out. Then there's no inventory on hand. Then the cash received is 1 million. So this the net income, we haven't balanced out between total asset, liability, equity, because net income 400,000 should be accumulated, retained into the retained earning. So we balanced that out. So again, the point of this exercise is that if the Apple Inc. assume that the ABC Wireless company is not going to be fulfilled with the discount, then have to record from the gross sales 1 million. Okay. Then next, the gross sales record when the discount fulfilled. It's the same situation. ABC has not met the discount term, so Apple recognized gross sales, its iPhone, the same information. So I'm going to just copy and paste of this from from the last transaction, which is the same, but for the transaction number 2 is different. Unexpectedly, Apple Inc. collected cash within the discount period, 10 days, within the 10 days, because ABC fulfills its obligation to pay within the discount period. Then, that's the point. How much then Apple collected? After 2% discount, the discount term is 210 net 30, so 2% within 10 days discount. So how do you calculate it? Now cash amount is 1 million times after 2% discount, so 980. And then account receivable should be removed. How much accounts receivable removed? 980? Oh, no. If you record this accounts receivable reduced by only 980, then we have accounts receivable remaining 20. That means that we have the Apple Inc. has a right to receive cash $20,000, even though this ABC Wireless company paid the $980 with the 2% discount. The benefit of the discount payment, within 10 days is that they can pay only 980, so that they can they don't have any obligation to pay $1 million, right? This $980,000 cash payment is covering this accounts receivable $1 million. So by paying 980, the account receivable should be removed. Instead, the Apple, again, we are creating the balance sheet and income statement of the Apple company. So we should record sales discount. Now just finally the sales discount we have to consider. The reason why we have started from the gross sales is that we don't think this ABC Wireless company will pay within 10 days. But all of a sudden, this ABC company may have some cash, so they could pay 980. So we need to record the sales discount. So how much is sales discount, right? Always debit and credit should be equal. You can just plug in. What is this 2%, right? 2% is $20,000, which is the discount amount, so that we can balance out between the debit and credit. Okay. So let's post this journal entry into the key accounts of each account. Accounts receivable. Now we don't have, Apple doesn't have any accounts receivable because the wireless company fulfilled its obligation to pay within 10 days by taking advantage of a 2% discount. Then gross sales always a starting point if Apple Inc. didn't consider the discount. And then cost of goods sold based on the matching principle. Inventory out, the full amount of inventory out, the cost of this inventory. And then cash received is not 1 million by taking 2% discount. The Apple Inc. only collected 980. And the sales discount, why is the sales discount is the debit side? Because this is the contra account that reduces the gross sales in the parentheses. So the sales discount is recorded in the debit side. That also reduces the equity, right? That's why you record the debit. So the sales discount, there you go. Now let's post this T account of each account on the balance sheet and income statement. Accounts receivable, now we don't have anything. Okay, again, if we had recorded 98,000, what happened? We still have a right to receive cash $20,000 from ABC company, but it is not, because the ABC Wireless company fulfilled its obligation to pay $980,000 with the 2% discount by paying within 10 days, right? So it is not. It should be exactly 1 million, so that Apple doesn't have any asset, any accounts receivable to receive cash any longer. Then after accounts receivable, we should record the gross sales starting point, assuming that the Apple doesn't think ABC Wireless will pay within 10 days, but it was not. Anyway, starting point. And then cost of goods sold. What is the cost of goods sold? Based on the matching principle, there you go. After net sales, cost of goods sold is always negative because it's expense that reduces equity. And then inventory out, because the Apple sold this inventory, so we don't have any inventory. And then cash received is not 1 million but 980. Then sales discount is contra account that reduces the sales, because the sales is not 1 million. Sales is now turned to 980, right? So let's record the sales discount as negative, so that the net sales is on the income statement 980. So the gross profit is 380, assuming that we don't have any transactions under the gross profit. This 380 should be retained into the retained earning. So it's 380. So we balanced out. Okay, so I wanted to compare this two cases, the gross sales recognition, assuming that the Apple Inc. Doesn't think the ABC Wireless company will pay within 10 days. And then this first case, as it expected, okay, the ABC Wireless paid after 10 days without any discount, but this case paid within 10 days by receiving the 2% discount. In this case, the Apple should recognize a sales discount to reduce the gross sales amount with the same amount of cash received, 980, into the net sales amount. Okay, see you in the next video clip. Guys, bye-bye.